Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar slid lower against its rival, the greenback, on Tuesday in reaction to escalating concerns over the economic outlook for China as a result of the coronavirus outbreak. The initial selling pressure was triggered after Apple Inc. announced that forecast guidance would miss expectations due to the coronavirus. The most valuable company in the US initially said it's expected to report net sales between 63 billion to 67 billion in its fiscal second quarter. In addition, news sources reported that the consumer spending in China has come to a standstill due to the spread of the virus. And then also we got a second wave of selling. As you can see here, the market fell heavy once it broke 67 cents. And now pressuring the level around 66.60. From the second wave of selling or supply, the minutes to the RBA for the first meeting for this year was still a little bit mixed. After the minutes expressed that the decision of holding rates at 0.75% was very near or close to being cut. Although the central banks appeared content with the state of the Australian economy at the moment, after the approval of jobs and inflation data. Still, as you can see from the technical outlook, if we just draw a couple of lines in here, you can see that the downtrend here, if I'd just like to add that line in a little bit more clearer, is that the market still poses a threat to the downside. And as you can see, as this pattern breaks into a further negative sentiment with the RSI nearly marrying up with the MACD, a break of 66.60 would give further indication down towards 66 cents and give an objective of 64 cents. Overnight, with the US returning after President's Day holiday, is that the bulls could not defend the level of 108.20 and it was crushed by the bears and taken out. The support gave us a fresh 3-year low of 107.85, and then on the flip side, seeing the dollar index rally in 3 years to a high of 99.35 and still remains there. It is assessed the ADX is overheating. The RSI is really in extreme oversold condition. I will keep a very close watch on this because we can see a snap to the upside. I keep a very close call in terms of being short and continue to lower your stop losses in accordance to your risk management in the event of an unexpected rebound. Tomorrow we see the release of the Federal Reserve minutes, and no doubt they may be a little bit old because last week Federal Chairman Jerome Powell gave his testimony on Capitol Hill, so the market will be mainly focused on any change to the 2% inflation target. Dollar yen posts a dragonfly doji, but still, in terms of where we are, it's indecisiveness. As the market looks towards that 110.30.60 area, I still view it as a supply zone, and I do anticipate we see a further round of safe haven demand strengthening yen due to the Apple Inc. Revenue warning, and could see a move back to 109.55 or lower to the objective I'm calling at the moment at 108.55 to 70. The pound really pretty much didn't go anywhere overnight and still trade into a sideways pattern, so I'd rather be neutral here and don't really have a strong view because the MACD is really flat, so I'd rather wait for better opportunities. Dollar CAD stages a rebound off the level of 132.2030, posting a low of 28, but still poses a threat to the downside. I do anticipate the market should continue on its trek, as the fact is that the MACD still remains married up to the RSI, and therefore a break of 132.20 exposes the region down to the target of 131.75 and maybe extending to 130.70.90. The bulls for the gold shine as the market fell back on the yellow brick road, as I would say, and reclaimed the 7-year highs of 1,600 overnight and posted a fresh intraday high of 1,604 with a previous spike here at 1,611. At present, the market is a little bit cautious, I would say, and the fact is that in case we get a sharp turnaround, because as previously the market did downturn quite significantly, and even back here, so we could see that pattern happen again. But with that being said, a break of 1,615 gives further exposure to the upside and sees a rally on to 21 to 23 and maybe up to around the 30.45 region. Support seen at 88.90, so it's a bit of a drop, but that's where I view it at present. Finishing up with oil, well, the market's posted a dragonfly. This gives us further indication that we should see oil continue its rally, even though we did see a brief pullback. I am expecting to see a rise up to 52.45.55, which was where yesterday's high was, and break beyond there and look towards a target of 53.80.90 and reassess from there. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the great start to this new day.